We're looking at a scenario really where all emerging markets seem to be underperforming, with evidence that investors are withdrawing from emerging market equity funds. To what extent are you pinning this down to the main contributing factor to the rand weakness we're seeing filter through?
Hi, good afternoon, Alishia. Yeah, we've seen over the last few months that's certainly been the trend with the sort of returns emerging markets have given over the last few years compared to the developed markets. It's certainly wise for international investors to be lightening up and switching that. We've seen it locally in the equity and foreign bond activity. So certainly that will be a contributor to the rand's position. But also there's other things at play. There's certainly, as was made evident in the reserve figures that were released, that the Reserve Bank has been accumulating foreign exchange reserves. So there's that, as well as the backdrop for emerging markets generally.
Let's hone in on that central bank intervention in the market, because authorities leaning heavily on the rand. Data on Monday showing 3 to 4 times bigger than intervention we're ordinarily used to seeing, and many saying that we're looking at selling of rands into an already weak market, pretty ill-timed. Your perspective?
Well, I think, if we look at where the rand was trading last year, it was certainly sort of averaging in the upper sort of 7 rand levels. So the timing of it certainly, is debatable, but we've seen some really, starting off the year sub 7 rand. So, it's not necessarily, if you agree with the policy, then it's certainly not bad levels. We've seen other emerging markets doing exactly the same thing. So we must assume that, the Reserve Bank has measured up the pros and cons in the strategy, and they feel quite comfortable with it. So it's not necessarily bad levels to be doing that if you agree with that stance.
James, where these are just, a couple of the threats to watch when it comes to pressure on the local unit, just how much rand weakness are you factoring in at this stage as a possibility? Because when it comes down to it, we haven't seen that emerging market growth story taper down very much either.
No, I mean, as far as the rand's expectation going forward and risks to it, well, tonight we've got the State of the Nation address. So as far as sort of that affecting the rand, you'll see foreigners looking at it for any sort of news on perhaps nationalisation, on what the plans are for employment, and that would also have some sort of bearing on the currency. As far as the daily levels on the rand, we've seen some sort of exporter activity in the upper 20s towards just close to the 7 rand 30 level. So as far as where the rand's going at the moment, it seems to be pretty range bound until tonight, but I think for the time being, the risk looks for a weaker unit at the moment.
In the meantime, we've seen some data filter through. We touched on it a little earlier on in the show, where mining production data has been released, expected to be higher, but we've seen an acceleration of 12.2% from 9.6%. How much have you read into that data, and are you looking more so towards manufacturing data as opposed to these numbers that have been released?
Yeah, I think in light of what happened to commodity prices, you can to some degree expect mining activity to be accelerated into that towards the end of the year as well. But I think more importantly, we'll look at the manufacturing just to get an idea of how that's been going. That comes out a little bit later today. So we're expecting that to have dropped off a little bit in line with what the PMI was perhaps suggesting earlier. But I think between the two, certainly we'll be looking towards the manufacturing number, yeah.
Of course, globally in focus, the BOE's rates decision. What are your broader expectations there, where inflation risks in the UK has really gotten the rhetoric going in terms of a tightening that's possibly needed sooner rather than later on that end?
Yeah, it's interesting. You can also look at drawing some comparisons to potentially our own situation down the line. But certainly with regards to the UK at the moment, they've got higher inflation. It's over the band, and it's expected to remain that way. They've actually moved their expectations up. So with regards to the UK economy, as far as economists are concerned, no one really expecting a hike. The economy can't afford it at this point. But looking at what the market's factoring in, it's factoring in a 20% chance of a hike. So there are those fears that with that higher expectation of inflation, although caused by exogenous factors such as fuel and food and things that are affecting our own economy as well, there is that fear that perhaps there is a surprise hike. It's unlikely at the moment, but certainly a risk. And as I say, you can draw comparisons back to our own position in South Africa with exogenous factors likely to become a major risk to our inflation outlook going forward. So we're going to find ourselves in a very similar position potentially later on this year. So as far as the action this afternoon with regards to what the Bank of England does, I think we'll be watching that quite closely, because generally central bank activity could indeed influence our own.
Very, very quickly, US jobs data also expected to be released today, and many questioning the kind of impact that's said to have, because even when we saw that bout of US weakness yesterday following Ben Bernanke's speech last night, it failed to make any difference to movement on the local unit.
Well, that's it. Just overnight, as you say, with Ben Bernanke saying that quantitative easing, the door is still open for it if required, and we saw the US Treasuries react accordingly. I think in light of last week's confusing non-farm payrolls versus an unemployment figure, I think we're really going to focus going forward on getting a better picture as to what the job creation position in the States is. So we'll certainly be looking at that one this afternoon to just sort of add some sort of clarity to the confusion right now.